Hi, it's Lee. Did you know that there are investment cycles that could make you an automatic millionaire? The pendulum is always swinging. The Dow goes up, the Dow goes down. And these swings from overvalued to undervalued happen in all other investment classes as well. The other classes that most investors watch are real estate and gold and silver. Now this is a tale of two brothers, Dave and Gordon, both born in the last half of the 1800s, and their families. At the turn of the century, they both started their families, and Dave and Gordon decided it would be a great idea to start an investment account for their two firstborn children, Joe and Bill. So they each invested 1.5 ounces of gold in their accounts and bought one share of the Dow. At that time it was worth $30. By 1923, the investment had tripled. And then the markets really took off. In 1929, the share of the Dow was worth 12 times more than what their fathers had paid. In 1929, Joe's daughter Sarah was born, and Bill had a son Darren. Both fathers, in 1929, transferred their investment accounts in trust over to their newborn children. Bill had been taught to believe his banker's advice that you should have a diversified portfolio and hold on for the long term. So he kept his one share in the Dow, which was now worth $380. Joe, on the other hand, had recently learned a little bit about investment cycles and had a bad feeling about the stock market. With the Dow at 380 points, he decided to sell and buy 18 1-ounce gold bullion coins. A couple of months later, the Dow crashed and bottomed out at 40 points, worth about 2 ounces of gold 3 years later. Joe now sold Sarah's 18 ounces of gold and bought 9 shares in the Dow. Sarah held on to this investment for the next 3 decades and did very well. But in 1966, she remembered the story her father had retold many times about selling all the stocks when the market was overvalued and buying gold. Sarah looked up the price per earning ratios in the market and found that stocks in general were extremely overvalued. And when the Dow was priced in ounces of gold, it was 1.5 times higher than the peak in 1929. So Sarah sold her shares in the Dow and was delighted when she was able to make a gold purchase of 252 ounces at the current gold price per ounce. In 1972, the dollar was no longer tied to gold, and the value of gold started to rise. In the late 1970s, it took off to $850 an ounce. At that point, she decided it was time to sell her gold. The Dow also happened to be 850 points at the time, so she bought 252 shares in the Dow. In 1999, Sarah was getting renovations done at her house. One day she heard the workers talking about the dot-com stocks they were buying, and she immediately started to get an uneasy feeling about her stock investment. She found the price per earnings ratio of the market was over 30% higher than the peak of the market in 1929. Then she divided the points of the Dow by the value of gold and found that, in terms of gold, stocks were almost 2.5 times more overvalued than before the crash of 1929. So Sarah went to her computer and put in an order to sell her shares in the Dow. She took the proceeds and bought 11,088 ounces of gold. It had been years since Sarah had talked to Darren, and when they crossed paths again in 2008, Darren talked about the financial wisdom his father had passed on to him. Live below your means, get out of debt, save your money, and invest for the long term. He was especially proud of that first investment account, which had remained invested in the Dow and had grown over the years, and today was worth $12,000. Sarah didn't have the heart to tell him about the 11,000 ounces of gold in her account and what it was worth at the current gold price. Now let's do a little math. That $30 share in the Dow Darren's father had bought had gone up by 40,000%. When you divide that $12,000 by the price of gold today, you could buy 8 ounces. In 1929, it was worth 18 ounces. So in terms of gold, that 1929 share in the Dow has lost 55% of its value. Sarah's 18 ounces of gold in 1929 had grown to 11,088 ounces, a 61,600% gain since 1929. And from 1900, the original 1.5 ounces gained 739,200%. The original $30 investment had a gain of 55,440,000%, with a gold price today at $1,500 an ounce. Now the question is, how many of you blindly accept the advice of your financial advisor at the bank and invest in mutual funds and bonds. Take a look at the history of gold, silver, and the stock markets. You don't have to wait 100 years to get rich. We are in one of the biggest wealth transfers in history right now. If history repeats itself, gold and silver could have a long way to go and rise way above today's gold values, and stocks are likely to fall in price. Let me ask you a question. Do you want to be rich? It's a trick question, really. The real question is why? I've got something very special for you. I'm going to give you access to David Bach's Automatic Millionaire webinar. David will be asking 6 questions, and your answer to those questions will tell you whether you're going to be in the 20% who can afford to retire at age 65 or sooner, or in the 80% who will keep working until they can't work anymore. There's no question in my mind that you can be the next automatic millionaire. Go check it out. www.questingwealth.com